Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
You know, for so many weeks we had a theme of it's a down week, it's a negative week. We're going to start on a down note. The last few weeks we've been actually able to start on a positive note, and this week is not much different. Another great week, or a pretty good week for both cattle and hogs. What did we see in the markets this week?
Yeah, well, I think when you look at markets this week, number one, hogs, I believe, were up every day this week. So that's a nice change of pace relative to where we've been, to see cash hog prices go up every day, and what's been still pretty heavy slaughter period of time is nothing but good. Box beef cutout values up for the week as well. And I'll say, you know, much of the strength we've gotten early in the month was associated with middle meats, but we've actually seen some strength in some other parts of that box beef cutout that tells me that demand is still there for product and very positive. Cattle futures up for the week. On the cash side, we're maybe steady to a little lower in terms of calf prices, but by and large, strength in cattle futures is another good sign for cattle markets.
And on the hog side of things, to see another strong week, or another week where we've seen a gain or an increase on the hog side with pressure on shackle space and continued big slaughter numbers, that's got to mean maybe a little something, or give producers a little something to end the year on a positive note?
Well, Megan, it certainly seems to me that we've gotten perhaps through the very worst of the shackle space issues, and maybe they weren't as bad as we might have anticipated going in. And I will say, I think the coordination that we've seen through what's been a very heavy period of time has helped us in terms of getting in a situation where we had hogs coming to market with no place to put them. I think we certainly pulled pigs forward and maybe slaughtered them early, as we looked at slaughter weights back in October, November, where we were a couple of pounds below a year ago. It tells me we were doing a much better job of keeping current and maybe trying to reduce just that big slug of hogs here at the end of the year.
Farrow to finish returns came out this week. As we take a look at those numbers, what are some things that pork producers really need to take from those figures?
Yes, I'll say, you know, we got that information from Iowa State this week. I believe November returns per hog were a negative $35 after what was October negative 30. So it reminds me to say, you know, even though we're talking about more positive hog prices, we have been in a pretty tougher period of time for hog producers. And so it just reminds us that we have a lot of supplies of hogs, we have a lot of supplies of pork. We're likely going to continue to see prices at the lower side of what we've seen the last 2 or 3 years. And as producers, they need to be prepared for what's coming. I think in terms of we might get some strength in hog prices in 2017, but you know, I wouldn't ever suggest we're going to be back to where we were with some of the disease issues we had back in 2014 when we hit record pork prices.
Scott, as we talk about the pork market and the other protein markets, as we look at exports this week, a little bit of weakening in the dollar, how does that figure in? And is that a good sign, or some good news for livestock producers?
I think it is some good news for producers. You know, a weaker dollar certainly makes our products less expensive to consumers in other countries. And when you realize the kinds of expansion in supplies that we're bringing to market today, finding more home for product is very important, because if we don't find that home outside the United States, we'll continue to have to see disappearance increase here in the U.S. And that really happens through lower prices. We did get some retail price information this week. Pork retail prices were down 11 cents for the month. We got a little strength on the beef side, so up about 3 pennies. But just reminding us that as we continue to push more product to domestic consumers, those retail prices probably have to work lower. Ultimately, some lower producer prices. So if we can push things out of the United States, it will give us an opportunity to maybe keep those lower prices to a minimum.
As we take, you mentioned lower retail prices. As we look at that, that's really got to be a great opportunity for the consumer side of things. So maybe a silver lining for a little bit lower prices on the producer side.
Yeah, so I think consumers, they're going to see more and more opportunities for some features of products as we move along. Again, just trying to make sure we move the supplies of product that we have and make sure those don't build up in freezers as we look ahead.
Scott, as we kind of wind things down this week, really it's a short week for us. There's not a ton of things that are going on. But as we look to next week, it's a really big week for reports. Cattle on feed numbers come out, quarterly hogs and pigs, and cold storage numbers as well. Let's start first with the cattle on feed. What are some things that we're watching for in that report?
Well, we certainly want to see what happens to placements as we end 2016, and there's I think some interest in terms of how many calves do we end up with on wheat pasture, how long do they stay there, when do they come to the feed yard. We've been running maybe lower than we might have anticipated in terms of cattle on feed the last couple of reports. However, I wonder if there's a lot of calves sitting out there ready to be placed on feed at some point in time, and so whether we get any indication out of that is certainly going to, I think, set the stage as we look ahead into 2017.
We've talked a lot about some adjustments that have been happening on the quarterly Hogs and Pigs report. Are we looking for that next week too? And if that happens, what does that mean for pork producers?
Yes, I do think we want to pay attention to what kind of revisions we get from USDA, if any, from the Hogs and Pigs report. We have been seeing adjustments upward in terms of pig crop information from them, and all I say is that revision's been only adding pigs to the mix, and so we might end up in a situation where, yes, we have more pigs than we would have anticipated in those previous reports. But also, I'm very interested to see what happens to sow inventories out of this report. We do have more processing capacity coming on in 2017, and whether or not we're seeing producers that might be holding a few more sows trying to fill some of that processing capacity coming on board, it will be very interesting to watch the report on the sow side as well.
And finally, that cold storage report, any insight into what we're looking for in those numbers?
Yeah, I think we're pretty early at this point. I think in general, we want to make certain that we don't see product back up in freezer space here in the U.S. We know we have been pushing a lot of product on U.S. markets. Any sign that we're seeing a buildup of stocks is certainly problematic as we move into 2017. So there's plenty of things that we're going to get out of the trio of reports next week that I really think set the stage for the next several weeks as we look ahead in 2017.
Scott, anything else today?
I believe we've covered the majority of it. It has been a little more quiet week in terms of information.
Have a great weekend, and we will talk to you next Friday.
That's great. Thanks, Megan.
All right, Scott. To subscribe or if you have questions for Scott or myself, visit our website, brownfieldagnews.com. Click on the link and it'll send your questions directly to us. And you can subscribe to have our weekly livestock market update delivered directly to your email box every Saturday morning. Have a great weekend. I'm Megan Grebner on Brownfield.